In this webinar, we'll be helping you understand how your pension is calculated in the LGPS. We don't expect the webinar to take up the full 45 minutes, and it is being recorded. Just a few things to note before I start the session. So please ask any questions in the questions and answers facility. All these questions will be answered after the webinar, and all attendees will receive the answers through a frequently asked questions document. And lastly, cameras and microphones are turned off. So what is the local government pension scheme? So a pension is a great way to save for retirement, and the public sector pension scheme, like the local government pension scheme, is one of the best. So what is a pension? It's a way of saving for retirement that will pay you an income for life after you finish working. Pensions come in many shapes and sizes, and today we'll be looking at the unique features and benefits of the LGPS. So in the LGPS, the benefits you build up are based upon your pay and how long you're in the scheme. It's not like many schemes that are called defined contribution schemes. In those sort of schemes, your benefits you build up are based upon how much is paid in. Whereas in the LGPS, your pension builds up each year based upon your pensionable pay, so your pensionable salary for that year. Your pension is guaranteed by law and not linked to investment markets. Now, that means there's no investment risk associated with your core pension savings. The national rules and regulations of the scheme guarantee that the pension you build up will be paid to you whatever happens, even if the stock market crashes. Now, although both you and your employer pay into the pension scheme, these contributions do not relate to your benefits. They help fund the scheme itself. Since the 1st of April 2014, the LGPS has been a career average scheme, also known as a CARE scheme, which stands for Career Average Revalued Earnings. Members who paid in before this date have built up final salary benefits, and we'll explain that in a bit more detail later on in this session. In the CARE scheme, every year starting at 1st of April, 1/49th of your pensionable pay is added into your pension account and increased annually by the cost of living. So you take your yearly salary, divide that by 49, and that amount is added to your pension account. When you retire, all these yearly chunks are added together, and that's the pension you get. It's that simple. The LGPS is a great way to save for retirement. You receive tax relief on the contributions you pay, and it's flexible, so you can choose to take a tax-free lump sum when you retire. So what does it cost? The contributions you pay are based upon your salary, and these bands are updated every April. If you earn enough to pay tax, you'll get tax relief on your LGPS contributions. If you're a basic rate taxpayer, £1 in contributions will cost you 80p. So for example, Sam earns £30,000 a year, so has a contribution rate of 6.5%. The monthly cost to Sam will be £162.50, but with tax relief, the net cost is £130. Your employer then meets the rest of the cost of providing you your pension. The long-term funding aim of the scheme is for members to pay 1/3 of the costs, with employers paying 2/3. This would mean that the average employer contribution would be 13%, but in reality, many employers pay more than this. In this slide, we see how Howard builds up his benefits in the main section of the scheme. So his contribution rate is 5.8% because salary is £24,500, which means his yearly pension build-up is £500, which is the £24,500 divided by 49, and his death in service lump sum will be £73,500 if he passed away as an active member, and that is just 3 times his salary. Now, in times of financial hardship, you can join the 50/50 section of the scheme. The 50/50 section allows members to stay in the LGPS when in the past they may have opted out to save money. In the 50/50 section, you pay half your normal contributions and build up half the benefits you would have built up in the main section of the scheme. Now, it's important to note that joining the 50/50 section of the scheme does not change the benefits paid to your dependents when you pass away. So you can see from this slide, joining the 50/50 section reduces Howard's contribution rate as well as his pension build-up. But the death in service lump sum stays the same at 3 times Howard's annual pay. You'd have to let your employer know in writing if you want to join the 50/50 section of the scheme. Here at Shropshire, we have a 50/50 election form which you can find on our website. Now, the 50/50 section is only a short-term option. Employers must move members back into the main scheme every 3 years, and this is tied into the employer's pension auto-enrolment cycle. However, you can elect to join the 50/50 section again once you're opted back into the main section of the scheme, and you can switch between the 50/50 and and the main section as many times as you like. When it comes to working out your pension, it's split into 3 different tranches. So you've got pre-1st of April 2008 membership, you've got membership between 1st of April 2008 up to the 31st of March 2014, and then you've got membership from the 1st of April 2014 onwards. So the LGPS was what's called a final salary pension scheme up until the 1st of April 2014. Now, the normal pension age for final salary benefits is generally 65. Then we entered a career average or care scheme from the 1st of April 2014, and the normal pension age for care benefits is linked to your state pension age. So we'll delve more into how your final salary benefits are calculated in the next slide. When it comes to calculating your final salary pension, it's split into 2 tranches. So first, it's service before the 1st of April 2008. So for each year of service before the 1st of April 2008, you get a yearly pension equal to 1/80th of your final pay, plus a lump sum of 3 times your pension, known as an automatic lump sum. And then the second tranche is service between 1st of April 2008 and 31st of March 2014. So for this period, for each year of service between those dates, you get a yearly pension equal to 1/60th of your final pay, but no automatic lump sum. So you move from an 80th scheme to a 60th scheme. Your final salary service is adjusted for any periods of part-time work, but we use a full-time equivalent pay figure to calculate your pension. This means if you decide to reduce your hours before you retire, this won't affect your final salary benefits because we use that full-time equivalent pay figure. It would just affect the care pension you build up going forward from the hours change. Your final pay figure is usually your pensionable pay in the year you leave the scheme, but pay from one of the previous 2 years can be used if it's higher. In this slide, we'll look at how your pension accrues in the care section of the scheme. So let's look at the pension account of a member who joined the scheme on the 1st of April 2014. The member had a pensionable pay of £23,500 in the first year, so built up £479.59 of annual pension. This is then revalued with CPI of 2.5%, which means that the closing balance at the end of the first year is £491.58. So to go over that again, you take the pensionable salary for that year, which is £23,500, divide that by 49 to get the pension built up in that year. It's then revalued by CPI or inflation, which gives the closing balance of £491.58. The member's pension account then continues to build up this way every year until they retire. If members have purchased additional pension contributions or shared cost additional pension contributions, the amount you've purchased in each year is added to your pension account. So upon retirement, some members will be members of both the final salary and care section of the scheme, but only one pension is paid upon retirement, which will be inclusive of both schemes. Now, at retirement, members have the option to convert pension into tax-free lump sum, but it does need to fall within HMRC limits, which generally speaking is 25% of what's called the capital value of your pension. So think of the capital value of your pension as a whole. You can take roughly a quarter of that as tax-free cash. Now, the commutation rate is 1 to 12. So for every £1 of annual pension you give up, you get £12 of lump sum. The LGPS rules change from the 1st of October 2023, and this is known as the McLeod remedy. When public service pension schemes changed from final salary schemes to career average schemes in 2014 and 2015, older members were protected from the changes at the time. But in 2018, the courts found that the younger members had been discriminated against because protections did not apply to them. The 2023 changes are known as the McLeod remedy, which remove the age discrimination found in the McLeod court case. Now, not all LGPS members are affected by the changes, but you might be affected if you were a member of the LGPS or another public sector pension scheme before 1st of April 2012. You were a member of the LGPS between 1st of April 2014 and the 31st of March 2022. This is known as the remedy period. And you have not had a disqualifying break in your public sector scheme membership. This is a break of more than 5 years. Now, there's a really useful video on the LGPS site, which I've linked on the slide, for anyone who wants to know more. Most people have many jobs in their working life, and not everyone will stay in the LGPS until they retire. So, if you're a member of the LGPS for more than 2 years, you've met what's called the vesting period of the scheme, which means you're entitled to a pension. So you're entitled to what's called deferred benefits. With deferred benefits, you can leave your pension with the LGPS in an increase with inflation every year and take it when you're ready. So the normal minimum pension age is 55 currently, but that will increase to 57 from April 2028. Now, if you leave and join a different pension scheme, there is your option to transfer your LGPS pension. Now, there are risks in transferring, so you are potentially giving up the guarantees offered by the LGPS, and of course there is the risk of scams. There are things known as club transfers, which are preferential transfers between public service pension schemes. So an example of a public service pension scheme would obviously be the LGPS, but also the NHS and the teachers' pension scheme. Now, if you leave and rejoin, you can combine your 2 periods of membership and your fund will write to you. So please understand the options available and the time limits that apply. These will be outlined in the letter from your fund. Now, if you leave the scheme and have less than 2 years scheme membership, you're not entitled to a pension from us. So therefore, you can either take a refund of the contributions you've paid in or transfer to another registered pension scheme. So lastly, we're going to talk about annual benefit statements. So your fund will generate an annual benefit statement for you every year, and these should be ready by the 31st of August. It's very important to check your statements. So you'll need to check that your pay, employment, and personal details are correct. Also review your forecast of where you're likely to be at your normal pension age. Now remember, this doesn't include any other pension benefits you may be entitled to. It will just be your LGPS benefits with that particular fund. You can actually use your annual benefit statement as a springboard for retirement planning in the future. The figures in your statement are based upon what's been provided by your employer. So please contact your employer if you think any of the details are incorrect. You'll be able to access your statement on the member portal, and the statement is actually an update on how your pension is growing. So as an active member, it provides you with 2 things. It provides you the current value of your benefits, but also gives you a projection to a normal pension age. So what your pension will be worth if you continue paying into the scheme up until your normal pension age. It also provides you with estimates of the death grant and potentially a partner's pension payable if you were to be passing away as an active member. So there is a reminder here to keep the expression of wish form for your death grant as up to date as possible. Okay, so that concludes today's webinar. On screen you can see we have the link to the LGPS member site, as well as links to Clwyd's, Oxfordshire's and Shropshire's individual websites.